The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Our stock of the day is Treasury Wine Estates. The winemaker has updated the market, telling investors it will book a $290 million non-cash impairment after tax in its upcoming full-year results. TWE also saying it will divest its commercial brand portfolio, which includes Wolf Blass, Lindemans, and Yellow Glen, which in FY24 only represented less than 5% of its gross profit, 5% I should say. Treasury Wine says it will focus firmly on its luxury portfolio with an update on its future operating model to be part of the FY24 result announcement. TWE says that its earnings will come in line with expectations at $658.1 million before material items. So, Treasury Wine Estates up by 1.5% off the back of that news. So getting out of those sort of lower margins, less popular brands, is that a good strategy?
It has been. We're long Treasury Wine, so I'm a bit biased. We like the way they've evolved their business. Obviously after it had its legs cut off when China closed the doors, they've evolved very well into the US, and I think as a business they've done a good job of that. I think the market got ahead of itself about how well China was going to let wine back in, and they built on too excessive earnings. But I think going forward, we're long, we like the stock, and we think it's going to outperform.
So you would be buying it now? Or?
At these sorts of levels, I'd be comfortable buying it. The risk reward's good. It's not very good. It's not what I'd say heavily underpriced, but we're very comfortable to hold it.
Thank you. What do you make of Treasury Wine Estates?
Not much. I agree with what we said about China. When they bought them Penfolds at the time, I thought that was unfortunate. Not for them, but for Penfolds.
Yep.
So what they've done, this is a process that companies go through. They buy up, they grow by acquisition, and then you end up then shrinking to greatness again. So you go, oh, it's not working, so we'll sell all the consumer, the lower price brands, if you like. It's probably not that they're not popular, it's just not, they can't make as much money out of it, and which is fine. So you go through this stage where share prices go up based on acquisitions, and then share price at the moment is going up based on disowning or
rationalisation.
Rationalisation, that's the word, right. So look, if you look at the numbers, its return on capital is only 5.6. We have a minimum of 10%, so it doesn't hit it. It doesn't pass our screening, so we would never look at it. If I look at it from a return point of view, it's still currently on a PE of 25.8. Its EPS growth rate average for the last 6 years has been negative 4.9, and sales have declined at 1% over that period. So it's pretty ordinary. Now, what Sean was saying is, well, they're positioning now to go better. Well, they may well, but from a price point of view, 25 PE is way too high for a company that's really in a turnaround situation, in our view. So if you look at it from a return point of view, what our models show is that if you bought it today, you're going to get a negative 0.6% return per year over the next 5 years, which is not exactly exciting. And if you wanted to get 10%, which is minimum you'd consider, in my view, you couldn't pay more than $6.98, and it's currently $11.59. So that's how we look at it.
I think I did say I didn't think the risk reward was attractive just here.
Yeah. you can change it to a hold. It doesn't have to be a buy today.
Absolutely.
Okay?
I'm not saying it's a bad company.
No.
I'm just saying, it's.
I'm staying with a buy, but we're holding it. We're not adding to it in this market. Okay. We're not adding into the pullback.
Got it.
That PE, by the way, is in the green, which is in the bottom quartile of its normal range. Treasury's always had a high PE.
Yeah.
And then the question is, that's fine if it's justified.
Yep. If the Chinese start drinking wine, you'll see it at $14 quickly.
Sure.
Yeah.
That's our stock of the day. Stay with us.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.